Welcome to this explainer. You know, every single year, this remarkably quiet little mountain town out in Wyoming completely transforms. We're talking a place that goes from fly fishing and hiking trails straight to becoming the undisputed center of the global financial world, literally dictating global yields overnight. For just a few short days, the sweeping peaks of Jackson Hole serve as this absolutely stunning visual contrast. You have this tranquil nature acting as the backdrop for the absolute most high-stakes economic conversations on the planet. But this year, there's a really fascinating, almost cinematic twist to this familiar story. While the world's most powerful central bankers are gathering there to chart out the future of money, the massive, fast-moving crypto industry is actually watching those exact same mountains for a completely different reason. Two worlds, one location, 1 week, both with the power to shape exactly what happens next in global markets. Okay, let's dive into this. Section 1, the Mountain Town Meeting, where words move markets. So the Jackson Hole Economic Policy Symposium is pretty much the definitive room where global financial heavyweights debate those core economic pillars: inflation, employment, economic growth, and monetary policy. These are, of course, the traditional levers of the global machine. But here is the open secret of Jackson Hole, right? The broader markets aren't actually waiting for the formal academic papers or the rehearsed speeches. Nope. They are waiting for these subtle signals hidden right there between the lines. As someone trying to understand the real mechanics at play, you really have to ask, what signals are markets actually waiting for? Are we looking at supportive rate cuts? Is inflation still being stubborn? Or maybe, is the economy slowing down enough to justify easier policy? These specific questions matter immensely to investors everywhere, mostly because the answers directly dictate whether money globally becomes cheaper to borrow or a whole lot harder to get. Just follow this chain reaction. A single sentence from Fed Chair Jerome Powell creates a massive, immediate ripple effect across completely different asset classes. The Fed Chair speaks, the US dollar and Treasury yields instantly shift, and then stocks, and as you'll see, increasingly Bitcoin, react in completely different directions. It's this entire global chain reaction triggered by literally just a few syllables at a podium. Which brings us to Section 2, the invisible tether. Crypto's surprising connection to central banking. And this brilliantly illustrates how, even though crypto fundamentally lacks a central bank, its entire ecosystem is deeply, deeply tied to fiat decisions. On one hand, when liquidity tightens, it puts intense pressure on risk assets as capital dries up. But on the flip side, easier policy naturally boosts market-wide risk appetite. These two opposing macroeconomic conditions directly dictate investor behavior across the board, completely crossing that boundary between traditional finance and decentralized digital assets. Let's walk through this chain reaction step by step to really lock it in. So, Fed policy dictates overall market liquidity. That liquidity then dictates the global risk appetite of investors. And finally, that risk appetite flows straight into the crypto markets. This is exactly why crypto traders pay such incredibly close attention to Jackson Hole. Bitcoin isn't physically sitting in a conference room in Wyoming, obviously, but monetary policy reaches absolutely everywhere. The Fed doesn't even need to explicitly mention Bitcoin for it to react drastically. Honestly, sometimes all it takes is just a simple shift in market expectations. Moving right along to Section 3, a tale of two summits. Simultaneous conversations, different languages. Now, what's really interesting about this slide is how it captures exactly why this week gets so fascinating. The crypto industry is actually hosting its own gatherings, right there in the shadow of the traditional banking world. Just picture it. Central bankers in tailored suits and crypto developers in hoodies sharing the exact same mountain town. But notice the sharp contrast in vocabularies here. The Fed speaks the traditional language of inflation, interest rates, and managing the economy, while the crypto world is talking about adoption, tokenization, and reshaping finance entirely. They're holding simultaneous summits, yet speaking completely different languages with seemingly different immediate goals. And that takes us to Section 4, Follow the Capital. Why the timing matters right now. So why are these two distinct worlds colliding at this exact moment? Well, global investors are currently desperately analyzing the data to figure out if the Fed is going to deliver a dovish, supportive message, or if policymakers will warn that rates need to stay restrictive. And it really comes down to this. Bitcoin may be decentralized, capital isn't. Let that maxim sink in for a second. It perfectly highlights the undeniable reality that despite all of this revolutionary, borderless technology, the crypto market is still firmly bound by the traditional rules of Wall Street gravity. The money flowing into these digital assets ultimately comes from the traditional, centralized world. Because at the end of the day, capital just doesn't exist in a vacuum. Large institutions still manage highly structured, diversified portfolios. Traders still watch U.S. Treasury yields like hawks. Major funds still respond to the ebb and flow of global liquidity. Investors always have to decide where to put their money based on the broader macroeconomic environment. And that is exactly why crypto is so incredibly sensitive to the macro shifts broadcast out of Jackson Hole. Let's move to and see how this builds into Section 5, the new financial future, the bigger crypto story. You see, the crypto industry's focus, especially at these high-level gatherings, has expanded far, far beyond just trading Bitcoin back and forth. The entire ecosystem is maturing rapidly, and we're seeing totally new pillars of financial infrastructure emerge. We're talking stablecoins becoming a legitimate, high-volume part of global payments, massive tokenization bringing real-world assets directly onto blockchains, and legacy financial institutions experimenting with fast on-chain settlement. Crypto companies aren't just building alternative sandboxes anymore, they're actively competing for a permanent structural place right inside the traditional financial system. The reality is, crypto isn't just an alternative outside Wall Street anymore. It is actively trying to deeply connect with it. And that perfectly summarizes the core tension at Jackson Hole this year. We're witnessing this rapidly evolving, sometimes tense, and honestly always fascinating relationship between traditional central banking and decentralized finance. You effectively have vastly different perspectives sharing the exact same mountain air. On one side, you have policymakers asking, how do we keep the economy stable? Sitting right next to crypto builders asking, how do we rebuild finance entirely? Now, in this explainer, we aren't picking sides between the two. We're simply pointing out the undeniable fact that despite their drastically different approaches and philosophies, these two groups are increasingly influencing the exact same global markets. So the crucial point is this. The next major crypto move could very well come from a central banker standing behind a podium, not from a decentralized blockchain upgrade, not from a new software protocol, but from a traditional policymaker adjusting a foundational lever of the fiat economy. That is where a tremendous amount of power over modern crypto markets currently lies. Which leaves us with this profound, unifying question to close out on. What does the next financial system look like? As these two worlds, the traditional banking establishment and the decentralized builders, continue to collide and intersect in places like Jackson Hole, how will their interactions ultimately shape the future of our money? I want to challenge you to keep that question top of mind as you watch the markets react this week. Thanks so much for joining me on this explainer, and as always, keep learning.
Subscribe and visit Web3 Newswire for visibility and credibility of your Web3 projects.